How are we to read these improving macro data that's coming our way? Who better than Swaminathan Aiyar to help us understand that with these winds of change blowing? Swami, always a pleasure joining you, having you on the show right here on ET. Now, firstly, it probably may be too early to call it a complete turnaround, but the macro picture is certainly looking a lot better. Would you agree?
The macro picture is undoubtedly better. I mean, a year ago, the current account deficit was something like 4.8% of GDP. I mean, it was truly alarm bells ringing. India had become one of the very, very fragile, attackable countries because of the size of that current account deficit. That has collapsed. It has come down 2 quarters in a row to such a low level that in some sense foreigners now say, okay, India is off the fragile list. I mean, 1% is so low, they can, even if it doubles, that's okay. 2% is okay. And they think that while gold imports have compressed it a lot, even if that is decompressed, India can probably stay within 2.5, in which case it will not have a problem. So I think this foreign confidence has come. I think the foreigners are also in love with Raghuram Rajan. It helps. He has an international reputation. And whenever I meet any foreign investors and you talk of Raghuram Rajan, their eyes begin to glow. So I mean, we have a rock star who is helping push our credibility along. But as far as the hard facts are concerned, it is also true that an economy that starts growing very slowly will suck in fewer imports and therefore means that the current account deficit automatically goes down. Unfortunately, that same slow growth creates a problem for the fiscal deficit. So we have had a situation where the fiscal deficit is still in trouble. Only by creative accounting and slashing of planned investment are we having any kind of fiscal stability. This is not a happy state of affairs at all.
Swami, I thought Shobha was the only one calling Raghuram Rajan a rock star, but let's move away from that. Do you think the euphoria in markets is driven by the improving macros?
You see, when we talk of euphoria in the markets, I would call a thing euphoria if I found Indian investors are piling into the markets. I remember a time when college boys were doing day trading. That to me is euphoria. Current situation is that Indian mutual funds are still sellers. Indian retail investors are just not coming in. So Indians are not euphoric. So when you say the stock market is euphoric, all that we are saying is foreign investors are bringing in lots of money. They are bringing in lots of money, although Indians are not. Why are they doing so? Because when they look globally, how attractive are alternative assets? And the fact is, alternative assets are not looking attractive either. China is looking the most attractive. Everybody is worried about a huge crash in China. If China crashes, oh my God, all exporters of commodities, all those countries will also be in trouble. World economy will come down. I mean, so when people look abroad, they say, what do we invest in? And because the quality of assets globally seems to have come down, then they look at India and say, here at least there is some hope, something can happen. And so a modest amount of money has come in. And in India, I mean, a few $1 billion is a drop in the international ocean, but in India it's enough to send the stock market soaring. So let's not exaggerate what we are calling euphoria on the markets. Yes, things have definitely looked up. Foreign investors are definitely somewhat more optimistic, but even the foreign investors are realists and the Indian investors have not come in.
Let's not exaggerate the euphoria surrounding the rally. Swami, always a pleasure having you with us here at ET Now.